Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, guys, let's get into the action today on this Monday, August 5th, 2013. Markets are trading slightly lower today with the S&P 500 down almost 4 points, Dow down 57, NASDAQ down 2. Just a slight move to the downside today on extremely light volume. It is now after 2:30 p.m., and we've only done 34 million shares on the SPY. That is on record-breaking pace for the lightest day probably in maybe even a couple years in terms of the volume here on the SPY. So pretty astounding to see the light volume, but again, it is Monday in the middle of the summer, so that is not entirely out of this realm to expect extremely light volume, especially in August. August when the parents go away with all the kids before they go back to school, and so you generally will have very, very light volume. Now, the markets again are flat to slightly negative. We do see all indexes negative on the day. Spiders, though, are trading just underneath the moving averages. So see how you had this little bit of an uptick, this green candle, and then inside bar action here. This is what it's called. When you're inside the green candle and it's just sideways, that's inside bar action. So you have resistance with the moving averages above, but you have a bullish inside bar pattern there. With the light volume, it would not shock me later today to see a little bit of an uptick in the markets. Now, I don't think you're going to look for a major buy program, but could we see this market go back to the flat line? Yeah, it is possible. Absolutely possible. And we've seen that time and time again, so it's only logical that we would somewhat expect that in a day like today where the volume is as light as it is. All right, a couple other things to go over. First of all, we saw the markets trading right at the gap fill level right up here until one of the Fed presidents, Fisher, came out and made some comments today. His comments basically said that after the jobs data on Friday, the Fed is closer to tapering. Now, that was somewhat of a shock to the markets. Not a big shock because obviously we're not selling off much, but somewhat of a shock because generally what you see here is the jobs number from Friday was not good at all. Yes, we added 170 or whatever thousand, 160,000 jobs, but the jobs over 60 to 70% of those were low-paying part-time work. That's not good, folks. You know, all right, so if someone's getting a job, a full-time job, it was like a low-paying McDonald's type job, and then other people that were taking jobs were taking part-time jobs. So if that's the basis for the jobs that were added, that is not a good sign. All right, and again, to hear the Fed official Fisher still say that they're closer to tapering after that because the unemployment rate dropped because of poor jobs or small jobs or part-time jobs or low-paying jobs, that does bear a little bit of cautionary red flag going forward because it makes me think that the Fed is going to taper regardless of economic news. All right, it tells me that the Federal Reserve is beginning to think that it doesn't matter. The influx of the money they're printing is not really helping that much anymore, and it's creating more risks down the line, which is what I've been saying forever, that the money printing isn't really helping, and it's actually causing further problems for the market in 5 years or so. And they may be starting to think that way as well, which again would be a negative for this market again if the Fed is starting to think that way. Therefore, we're taking away, no matter what the economic data is, the printing of money that they've been printing. Remember, they've been printing about $85 billion lately per month. In any case, markets are down just slightly on the day. Kind of curious to see if we get any further comments this week from any Fed officials. And again, just kind of scanning through here, I have a couple stocks I want us to look at. First and foremost, let's just jump to the daily on the SPY. Daily SPY chart just underneath the highs from Friday. Friday, again, markets hit a new all-time high. SPY closed right at the highs of the day, essentially. And that's where we sit right now. So we'll have to see again how it all plays out. But the market's again having a little bit of a pullback day, minor pullback day. Now, a couple stocks in motion today I want to talk about. First of all, Apple. You guys know I've been bullish on Apple for quite some time. I continue to be bullish until we hit the 200 MA. That's the target. That's the target that I gave ever since the 420 level. 420 was your master pivot right here. We came back into it on earnings. I predicted an up move on earnings, and that's exactly what we got. And from there on out, I told you guys it was a river theory, which is proprietary, which means it was a gap above the 50 MA and the pivot high right here, and it should continue to go to about the 480, 485 level. Sure enough, we're nearing that lower range of that 200 MA right here, and I expect it to go up there. I think you're going to hit the 475 to 485 level. 475 is the 200 MA, and then the 485 would be right here at this pivot low right here, which again is a major level. So I think, you're going to hit the 200, maybe get through and go to that next level, most likely in the next week or two. I do think it gets there pretty soon just because, again, the markets at some point have to turn down, and I think Apple probably gets to that target before they turn down. Okay. Another stock I want to point out, folks, Baidu, BIDU. This stock is having a reversal day. Now, why is that significant? Because anytime a stock has such a dramatic run up, which is literally a 50% move in the stock price from the low here around 90 to about the 140 level. So that's a $50 move, and the stock was only 90 before, so it's actually more than 50%. Anytime you have a dramatic move like that, and then you have a day where you have a reversal candle, that means that most likely a short-term top is in play. All right, so just be aware of that, folks. That again, Baidu, after today's action, you'd start to expect maybe a small bounce or a bear flag to form, and then further downside on Baidu, BIDU. All right, a couple other stocks to take note of. Amazon, I've been bearish on Amazon since it popped on earnings. When it was up here, I came out and said I believe Amazon has topped out for a longer period of time, and so far that's been the dead-on correct call, folks. You had the reversal here. Now, many of you might say, well, how come it went up on earnings? Well, the earnings were not good. I mean, anyone, even a blind man, could see that the earnings were not good there. But it went up anyways, and many people would say, oh, well, if it went up anyways, it's going to go higher. Wrong. It went up because it wasn't down on earnings very much initially. It was only down like $5 or so, and a lot of people had shorted it into earnings, so they had to cover their shorts when it was only down 5. They said, oh, well, if that's all I'm going to get out of it, let me just cover, cover, cover. When people cover, it creates buying. Obviously, to cover a stock, you have to buy the stock back, and it creates an upward move. So you got a short covering rally on the day after earnings, and then that was it. I mean, once the shorts had covered, that's it. The stock has just come in since and really negated that entire move. This is going to go lower, I believe, and again, as soon as the market starts to turn around, it should go lower pretty dramatically as well. Any bearish pattern bounces, I think, are shorts at this point on Amazon. Right, I'm actually very, very negative on Amazon based on everything I've seen in the charts. The PPT methodology, which is our proprietary methodology here, is telling me to be that way. So I am what it is. It tells me that, be that way. Another interesting factor today is JPM. JPM continues to be weaker than the overall market here. Please notice that about 2 weeks ago, JPM hit a new 52-week high, right? Yet the markets on Friday hit a new 52-week high, and JPM did not. So that's a negative divergence there. We also have MACD and stochastic negative divergences, but I'm not going to get into that today. But in any case, JPM is down 42 cents. Markets are also down, so I guess that's not super surprised. But it is showing us continued weakness in one of the leading stocks out there, and I do think that warrants a little bit of attention there. Another two stocks that are weak today, Chevron and Exxon. These stocks reported earnings last week, and the earnings were just horrendous on both of them, guys. Both these stocks have no reason to be trading up where they are. I think it's mostly being lifted because the general market is so euphoric and people don't really have anywhere else to go to put money in. But, I mean, any way you cut it, guys, Chevron is an Exxon. These things, when the market does correct, we'll see significant downside, in my opinion. Absolutely significant downside. You should see Exxon go back to 115 easy if we get downside in the market. Now, if the market doesn't come down, they're going to keep on buying these crap stocks, and not the Chevron and Exxon are crap. I'm just saying, based on where the earnings came in, where those keys came in, the stocks have no business being up in this level, and eventually they'll come back to reality. I think you can see a lot of like 1999, 2000 type bubbles in various stocks. A good one today would be Zillow. I mean, Zillow, look at the stock just recently. I mean, just in the last month or so, it's almost doubled in value. If you go back, I mean, take a look at this. Back to November, the stock was a $20 stock. I mean, even LinkedIn, LNKD had a big move on earnings on Friday. This stock, again, just going back to this point, $90 to $233. So you're talking in less than a year, basically in 10 months, the stock has almost tripled in value. And in all fairness, the earnings sucked on Friday. Yes, their top line, bottom line numbers were good. Their projections out, their estimates for the next quarter were horrendous, and the stock went up anyways because people are so euphoric that they're buying anything, which is great. I mean, for us as day traders, I love it. It gives us lots of opportunities, but in reality, when this market, again, when I guess you could call it when the bubble starts to kind of burst a little bit, you have to think there's a lot of stocks that could come down very, very quickly. Very, very quickly. Another one would be Tesla. Tesla reports earnings later this week. No fundamental reason to be up where it is. No technical reason to be up where it is. It's a bubble, and eventually it'll come down, and it'll go back to that. Believe it or not, Goldman made a call of $85 a share. I actually agree with that. Very rare I agree with Goldman, but I do agree, and probably within 6 months you see it at $85, if not less. If we get any sort of dramatic downside in the market, you'll see it there in a month or two. But, again, that's the big question of whether or not we're going to get that downside in the markets anytime soon. All right, so that's what we see here. Some more euphoric nature, bubblicious type stuff going on. Take a look at specs today. SPEX up 100%. Look at this small cap, guys. Small cap stock a week ago was a $6 stock. It hit a high of $28 today. $28 today. That's called a bubble in the making right there. Take a look at this one. Stereo Taxis here. Stock was a couple weeks ago a $2 stock. It hit a high of $10. When you start seeing these stocks that are low floaters just going nuts, it's just a clear and simple heads up that the bubble is in the market. You have to respect it. I'm all for respecting the bubble because it could continue for quite a long time. We saw a 1999-2000 bubble before it would burst in 2099, but it was a long time in the making. But at some point it will come down drastically, and we'll see that. Okay. All right. A couple stocks I like going forward. I love this chart of CBMX, guys. CBMX to me, I picked up a little bit already and sold it, but I have a little bit I'm holding on to the end of the day. I like this chart. I think it's a breakout candidate in the making. This is a small cap play. Look at it, ran up insanely in December. I think, again, it has a good chance of popping through $4 today. If it can get back to the highs of the day at 390, it'll easily go through 4. That's really what I'm looking for as a play. If it can get up there, then it should make a move. That stock looks good. A lot of the biotech small plays, the low floater biotechs, with all these other low floaters going, I think eventually we'll see the low floater bios go, especially if they have any positive news. They should go really quite heavily to the upside. So that's really where I'm looking at this point, the biotech low float former runners. And, CBMX is one of those. As you can see, if it can take out this 200, this could be a multi-day runner. I love the peaks here because it shows that it has power to make these big moves. And they've had actually some good news recently, so I wouldn't be surprised on CBMX. I do have some right now as well. All right, guys, I got to get going here. I'm going to get back to trading. Have a great afternoon, great evening. Come join us here at InTheMoneyStocks.com. Take the 7-day free trial to the Research Center. If you're a swing trader or an investor, if you're a day trader, we're there for you in the intraday stock chat. Take care.